GKFX presents the week ahead. Hi everyone. I've been getting a ton of questions about whether interest rates could really go negative in the United States. That's because Fed funds future markets just implied that they will. So I want to discuss what's going on there, as well as two big things that I have in mind for the week ahead in financial markets, which are the Federal Reserve Chair Powell's testimony to Congress and the latest FOMC minutes. But before that, let's kick off with the economic calendar. We've got a Eurogroup meeting on Monday, then an ECOFIN meeting on Tuesday. A breakthrough on joint debt insurance would be huge for the Eurozone and would very likely change what the ECB decides in June. So-called Corona bonds still seem unlikely, but the German court ruling might spur some action from politicians. One for the diary is when Powell testifies to Congress on Tuesday. We've got CPI data from the UK and Eurozone, where the crash in oil prices in April could easily take the month-over-month changes in consumer prices negative, which is just what happened in the US CPI. That's followed by the FOMC minutes, and we round off the week with the first set of Eurozone PMIs for May. Now, before I discuss what negative rates could mean for markets, can I ask that anyone preparing for the week ahead, watching this video, and working hard to be the best trader that you can be, give yourselves a pat on the back and click the like button on this video. It has the added bonus of making sure more people see the video, which means we can keep producing them. Alright, what on earth are Fed funds futures? It's actually super simple. They work like any futures contract where the price reflects where the market thinks the underlying price will be when the futures contract expires. Well, instead of it being, for example, an oil futures expressing where oil prices might be when the contract expires, it's the market opinion of where the federal funds rate, the interest rate set by the Fed, will be at the time of the contract expiry. It's pretty easy to price too. It's 100 minus the expected Fed funds rate at expiry. So say interest rates are expected to be 0.25% when the June contract expires, then the price of the June Fed funds futures will be somewhere close to 99.75. But here's the odd thing. The price of some 2021 Fed funds futures flipped over 100. That means traders are pricing negative interest rates in the United States in 2021. Okay, who cares what these traders are thinking, right? Well, actually, whenever we have a Federal Reserve meeting, traders and even the Fed themselves look at these contracts to judge market expectations. Fed Chair Jerome Powell said last week that there is no plan for negative interest rates, so I expect him to say the same to lawmakers this week in his testimony. I'd also expect there to be sparse, if any, mention of negative rates in the FOMC meeting minutes. But if there is, it could cause some movement in markets. All else being equal, negative interest rates should be seen as negative force on the dollar. However, for the Fed to go to negative rates, the economic scenario would have to be pretty desperate, and that could cause flows in the dollar as haven. Right, thanks everyone and good luck trading, and make sure to subscribe so you don't miss our next video.